Yes, my dear students, in this video, I would be discussing May 2026 indirect tax question paper along with suggested answer. So we'll begin with the multiple choice question. The first one is case scenario question. As usual, we will go first read the requirements and then come and read the case, guys. Based on the information given above, choose the most appropriate answer for the following question numbers 9 to 14. Guys, usually in the past, ICAI used to ask two case scenario question under income tax and two case scenario question under GST. But this time in May 2026, they have asked only one case scenario question, but under that there are totally six multiple choice questions. Whereas in the past, they used to ask two case scenario question containing three MCQs under each. So the pattern is slightly changed for May 2026 exam, but anyway, we will go through it. So the first one, question number 9 till question number 8, it will be income tax. Yeah, the first one is the effective date of registration for HHG and Co will be. So this question is on section 25 read with rule 10, which talks about effective date of registration. Okay. Next, compute the tax payable by HHG and Co for the quarter ending June 2025. So as they're asking for the quarter, guys, this seems to be like HHG and Co is following composition scheme under section 10. But let us see later. Import of services during the month of October that will be treated as supply is okay. This question is with respect to import of services. Whenever we are deciding whether the import of service is supply or not, we need to refer to two provisions, guys. One is section 7(1)(b), the other one is para 4 of schedule 1. That is, even without consideration, import of services will be a supply, but only if import is from a related person or establishment outside India in the course or furtherance of business. Yes, sir. Chalo, 12th one. The date by which an invoice must be issued to VGT Limited is. So this is on the due date to issue invoice, guys. So section 31. Yeah. Next, 13th one. What will be the place of supply for the transaction with SLM Limited? So this is with respect to place of supply. We need to refer to IGST Act. 14th one, the last question under case scenario. HHG and Co needs to furnish a statement containing the details of stock of inputs or inputs held in semi-finished finished goods on the withdrawal of composition scheme. Means maybe they are moving from section 10 to 9. So within what time they have to give the details of this stock they're asking. Okay, fine. So now we will come back to the case. We will read it. Yeah. HHG and Co, a partnership firm, hereinafter referred as firm, is engaged in manufacturing of semiconductors. Okay, guys, they are engaged in manufacturing of semiconductors, that is goods. Located in Sanand, that is Gujarat, the firm became liable for registration on 14th April 2025 as its turnover crossed 40 lakh. So 40 lakh is a threshold limit applicable for registration, guys. See, if they are supplying goods within the state, that to normal state. So they belong to Gujarat, which is one of the normal state. So the threshold limit is 40 lakh. Correct? Yes. Assuming they're supplying the goods only within the state of Gujarat. Okay. It applied for registration on 12th May 2025 and was granted registration certificate on 16th May 2025. Guys, one of the question is on effective date of registration. Yes, sir. So he was liable, the partnership firm was liable on 14th April. They applied for registration on 12th May. Just check. Have they applied within 30 days? Yes, they have applied within 30 days. April will have only 30 days, guys. Please be careful. So did they apply within 30 days? Yes. So if a person has applied for registration within 30 days, as per rule 10, the effective date of registration will be the date on which they were liable for registration. So what would be the effective date of registration here? 14th April. One of the answer we got it. Okay. But better don't mark it. Please read full case. Then only start marking, guys. HHG and Co opted for composition levy at the time of registration. So at the time of registration itself, they will have an option in part B to choose composition scheme. They have selected it. The total turnover of the firm for the quarter ending June 2025 was 112 lakh, out of which taxable supply amounted to 102 lakh. and exempt supply amounted to 10 lakh. So out of 112 lakh, which is a total turnover, 102 is taxable and 10 is exempt. Okay. And please be careful. Manufacturer need to pay tax under composition scheme on total turnover. If he was a trader, then he would have paid on taxable turnover. But here the firm is a manufacturer, so they have to pay tax on 112 lakh. But as they have got straight away registration under composition scheme, they will get the benefit of explanation 2 to section 10, where whatever is the threshold limit applicable for registration, we need to reduce it. I will explain that again. Don't worry. First, let me finish reading. The turnover of the firm crossed 150 lakh, that is 1.5 crore, on 11th July 2025. Immediately they have to go from section 10 to section 9, guys. Sir, can they wait till the beginning of next financial year? No. Immediately they have to withdraw from composition scheme and go to the section 9, that is normal scheme. Hence, HHG and Co. opted for withdrawal from the composition scheme on the said date and opted for monthly filing of return. Guys, one of the conditions, so one of the questions they have asked is, within how many days they have to give the details of stock. Whatever stock they have on the preceding day, that is on 10th July, they have to give the details within 30 days in ITC 01. ITC 01. That is as per section 18 of ITC chapter, read with rules, guys. Read with CGST rules. I repeat, whatever stock they have on the preceding day, they have to give the details of it. That is stock of raw material, WIP, finished goods, as well as capital goods. Within how many days, sir? Within 30 days. And in which form, sir? ITC 01. Okay. So we need to count that 30 days. One of the question is on that. Next. The firm imported the following services during the month of October 2025. Management consultancy services from Mr. Vijay Kapoor, a renowned lawyer in Dubai, who was an ex-employee of a firm. Ex-employee. See, employer and employee are related, but here it is ex-employee, so they are not related. Okay. The value of the said service was 2 lakh. Even though it was used in the furtherance of business, no consideration was paid by the firm. Guys, important point. Okay. See, I will just tell you both the points with respect to import of services. As per section 7(1)(b), import of service for a consideration, whether or not in the course or furtherance of business, is a supply. But here consideration is missing, so it is not a supply as per 7(1)(b). Now let us check para 4 of schedule 1, read with section 7(1)(c), because even that talks about import of services. So para 4 will tell like this: import of services from a related person or establishment outside India in the course or furtherance of business. Whether there is no see, in this case there is no consideration, but here it should be in the course or furtherance of business. Yes, sir. So in this case, are they related? No. He was an ex-employee. So it is not at all a supply, guys. It is not a supply. Okay, hence not taxable. Next, coming to B, architect services from Mr. Sunil, a partner in HHG and Co, who resides in France for 1,50,000. The said service was paid, but was paid means consideration is there? Yes, sir. But not used for the furtherance of business. Guys, when it is paid, it is a supply as per section 7(1)(b). And for what purpose it is used is irrelevant here. Is that clear? Because 7(1)(b) clearly tell import of services for a consideration, whether or not in the course or furtherance of business. So here purpose doesn't matter. When there is a consideration, straight away it is a supply, guys. So only one supply is there. So with respect to import of services, only 1,50,000 is there. Another 2 lakh is not taxable. Got it. Another question answer we got. Next, it also entered into a contract with VGT Limited of Chennai on 12th September 2025 for the supply of taxable goods worth 14 lakh. The payment for the same was received on 14th September. The goods were scheduled for delivery on 27th September but were removed from the factory on 26th September 2025. Guys, they have asked with respect to due date to issue invoice. Correct? Yes. So when there is a movement of goods, when the invoice has to be issued by the supplier, on or before the removal of the goods. So when the goods are removed from its place, it is on 26th September. So as per section 31, the due date to issue invoice when there is a movement of goods is 26th September here, guys. Got the answer for one more question. Next, on 10th October 2025, HHG and Co. supplied taxable goods in the territorial waters, which is located at a distance of 11 nautical miles from baseline of Kerala and 9 nautical miles from the baseline of Tamil Nadu to SLM Limited, registered person in the state of Karnataka. Means recipient is registered in Karnataka. But what is the place of supply? Place of supply would be as the nearest place, Kerala or Tamil Nadu. Nearest to the baseline is Tamil Nadu. So the place of supply, let us underline only Tamil Nadu. Yeah. So the place of supply would be Tamil Nadu, guys. Nearest to the baseline. Yes, all figures are exclusive of GST. Okay, sir. Let us start marking one by one. First one, the effective date of registration for HHG and Co. will be, I have already explained it. It is 14th April. Yes, sir. 14th April. Next, compute the tax payable by HHG and Co. for the quarter ending June 2025. Guys, here very important. For the manufacturer, it is 1% of total turnover. Or if we are taking a split between CGST and SGST, it is 0.5, 0.5 of the total turnover. But here, as the firm has straight away got registered under the composition scheme, they get the benefit of explanation 2 to section 10. I will just show you that. Okay, this is important adjustment. Normally students would have missed this 40 lakh especially, guys. Be careful with it. I will just show you 1 second. You guys also can open it if you have it with you. Yeah, under composition scheme, you can see for the manufacturer what is the rate of GST, 0.5%, 0.5% or 1% of total turnover. Correct. Now only for the trader we need to take 1% of the taxable turnover. Okay, sir. So full 112 we need to consider. Yes. But coming to explanation 2 to section, yeah, as per explanation 2 to section 10, while computing the turnover to determine the tax payable, that is in the current year, we need to exclude two special items. One is with respect to value of exempt supply of services provided by way of extending deposits, loans or advances in so far as the consideration is represented by way of interest or discount. Yes. But this anyway is not there in the question. You need not ignore. You need not consider about it. You can ignore it. Yes, sir. And sir, they have given exempt supply. No, sir. Guys, if they are not told what nature of supply it is, please don't consider that it is this. Okay, in short, I call this as financial service. Sir, in the question they have told 10 lakh is exempt supply. So what supply is it, sir? If they are not mentioned anything, please don't consider it as financial service. Hope you got it. Yes, sir. Next, this one. This is what is relevant now. Supplies from the first day of April of financial year up to the date when such person becomes liable for registration under this act. So this is nothing but the threshold limit for registration. That is either 10 lakh, 20 lakh or 40 lakh. But in our given case, it is 40 lakh. They only given in the question. So how much should we reduce now? 40 lakh. 40 lakh, guys. So you can see here, I have done the calculation. 112 lakh is the total turnover including exempt supply minus the threshold limit for registration, which is 40 lakh. Sir, how did you get to know that it is 40 lakh? Because they have given in the question itself, in the first paragraph. Hope you got it. Yes, sir. So on the remaining 72 lakh, it is 0.5% each. Sir, why did you take 0.5%? You can see the option. They have given a breakup between CGST and SGST. So it is better to take 0.5%. Or else even if you take 1%, divide it by 2 later. Okay. So you will get 36,000 each. So it would be option B, guys. 36,000 CGST, 36,000 SGST. Okay. Then coming to import of services, only the second one is taxable, the value of which is 1,50,000, whereas 2 lakh is not taxable. So only 150. Only 1,50,000. Yes, sir. Next. The date by which an invoice must be issued to VGT Limited, that is on or before the removal of goods, guys, which is 26th September, as per section 31. 26th September. Got it, sir. What will be the place of supply for the transaction with SLM Limited? Tamil Nadu. Nearest to the baseline, Tamil Nadu. Okay, sir. The last one. HHG and Co. needs to furnish a statement containing the details of stock of inputs or inputs held in the semi-finished or finished goods on the withdrawal of composition scheme by within 30 days. So it was 11th July on which day they became ineligible for composition scheme. We need to check the preceding day. So I will do 31 minus 11. Stock details as on 10th July we need to give. Yes. So 31 days in July minus 11 I am doing. So remaining is 20 days in July. But totally we require how many days? 30 days. So 30 minus 20 guys. How much we are getting? 10. So it is nothing but 10th of next month, which is August. 10th August. So on or before this date, stock details has to be given in ITC 01 guys. This is as per section 18 read with CGST rules. Got it? Yes. Easiest part guys. Easiest. When compared to income tax, GST questions, MCQ question was very easy. Yes. And one thing you have to note here is, yes, as I already mentioned, instead of asking two case scenario, they have asked only one case scenario, but under that itself, there are totally 6 questions. Okay. Let us move to independent MCQ guys. Mr. Aman, a registered person, regular monthly return filer, filed GSTR 3B for the month of June 2025 on 25th September 2025. Okay, guys, he is filing the returns monthly. Okay, na? Yes. So if he is filing the returns monthly, what is the due date to file GSTR 3B for the month of June? What is the due date? It should be 20th July, but he has filed it late on 25th September. Yes, sir. The GST liability worked out to be 30,000, that is CGST plus SGST for the supplies made in the month of June, which was paid with GSTR 3B for June 2025 on 25th September 2025. Guys, when there is a delay in payment of tax, there will be an interest at 18% per annum as per section 50. But on what amount, sir? Is it on gross tax liability or is it on net tax liability? If there is a delay in payment of tax due to delay in filing the returns, then the interest will be on net tax liability. That is output tax minus ITC. Remaining whatever has to be paid through cash ledger, no, on that interest would be levied. Whereas if there is a short payment of tax, that is, sir, return is filed, GSTR 3B is filed, but tax was paid short. In that case, interest will be on the gross tax liability, that is before reducing ITC. But in this question, no worries, they have given only one figure, that is 30,000. They are not given any information about ITC. So straight away calculate interest on 30,000. You need not worry about whether it is gross tax or net tax. What will be the total interest amount rounded off payable under CGST Act 2017? First, we need to calculate how many days of delay is there. So he was supposed to pay for June on or before 20th July by filing GSTR 3B. But he has paid it on 25th September. So interest will start from 21st July. 21st July. Yes, sir. So in July, there are total 31 days minus 20 I am doing. Sir, should it be minus 20 or minus 19? Minus 20 guys. Because even if they pay on 20th July also, no interest. Okay. So 11 days in July, August 31 days, September 25 days, including 25th. So should we count 25th also? Yes. So totally there are 67 days of delay. So let us calculate the interest now. 30,000 into 18% per annum into 67 by 365. They have given, assume 365 days in a year. Okay. So we are getting 991. They have asked us to round off. So I have taken 991. So choose it. So it is option D. Option D, guys. Is that clear? So please be careful. Whatever you get interest might be in decimal. Don't worry, sir. Exact number is not there in the option. Please look for the nearest one. They have also asked you to round off. Even if by chance if this statement or word is not given, you please round it off and choose the nearest answer. Yes, sir. Then the last one. Suraj Apparels is registered with GST in the state of Rajasthan. It sells leather handbags across India through e-commerce operator Wycart. Okay. Wycart, not being an agent, is registered with Madhya Pradesh GST authority as TCS collector as per section 52 and collect TCS on supplies made through it. Okay. Suraj Apparels made sales of 4,60,000 and received sales returns of 88,500 in the month of October 2025. Sales are exclusive of tax wherever sales return is inclusive of tax. Okay, listen. This is crucial. Sales are exclusive of tax. So this is 4,60,000 straight away value of supply. Whereas sales return is inclusive of tax. So we need to do reverse calculation for this to find out the value figure. Because TCS is applicable on net supplies, guys. That is sales minus sales returns. Yeah. Leather handbags are taxable at 18% IGST. So this is required to do reverse calculation for this returns. Determine the amount of TCS, that is IGST, because it is interstate supply, to be collected by Y card for the month of October 2025. First of all, is TCS applicable? Yes, because the supplier is registered under GST and they are supplying the goods through e-commerce operator. So when e-commerce operator collect the payment from the recipients before they give it to the supplier, should they collect TCS? Yes, guys, they have to collect TCS. And as they are asking IGST, it is 0.5%. If it is CGST, SGST, then 0.25% each. Yes. And sir, percentage is on what? Net value of supplies, guys. That is sales minus sales returns. But one thing we need to take here, please don't straight away take the returns because it is inclusive of GST. We need to do reverse calculation. Net value of supplies means it is value of supply as per section 15, which should not include GST component. Because students might get confused, guys, please be careful. For generation of e-way bill, we will normally take consignment value, that is value of supply plus GST. If it is more than 50,000, we need to generate e-way bill. Yes, but that is a separate topic. To collect TCS, we need to just take the value portion excluding GST. Yes, sir. So sales 4,60,000 take as it is. Then returns, coming to sales returns, 88,500 divided by 100 plus GST, we will get 118 into 100 because we are calculating the value portion. Correct? Yes. How did we get 100? 118. Hope you understood. 100 plus GST rate 18. Okay, sir. So net value of supply is 3,85,000 on that 0.5%, which comes to 1,925. 1,925. So option C, guys. So this is all about the MCQ portion of indirect tax question paper, guys. Yes, now we will continue with the descriptive portion. Under descriptive type, question number 1 would be compulsory, and out of the remaining 3 questions, student need to answer any 2. That means 1 is a choice. Working notes should form part of the answer and the answer should be as per the relevant provisions applicable for the exams, guys. Yes. So first 4 questions, that is from question number 1 to 4, it would be for income tax. From question 5, it would be for GST, guys. So question number 5, as I told, it is compulsory. Under that sub-question A would be on GST liability calculation. As it is a lengthy question, better we will go first read the requirement and then come back and read the data, guys. So what is the requirement of the question? We will see. Compute the minimum net GST liability of SSP Limited to be paid in cash, if any, for the month of October 2025 after utilizing the input tax credit. Yes. Then they have also given a note. Calculate GST for each point separately and legal explanation for each point should form part of the answer, but detailed provision for place of supply is not required. Okay, sir. So it is a 10 marks question. Now we will go and read the information given. SSP Limited, a registered person under GST in Gandhinagar, Gujarat, is engaged in making various supplies of goods and services. It provides the following details regarding the transaction undertaken in the month of October. So we are supposed to calculate how much GST SSP Limited is supposed to pay in cash in October month. Yes, it is nothing but like this, guys. So we need to follow the format. I will just show you. Yeah, here. So what is it, sir? Output tax we need to calculate first. Yes. From that we need to reduce input tax credit. Input tax credit. Yes, sir. And input tax credit includes the total tax on inward supply, whether it is taxable under RCM, or FCM. So this will give us output tax payable. Output tax payable. Yes, sir. For this again we need to add input tax under RCM. Under what, people? RCM. Yes, sir. That is the inward supply on which SSP Limited is supposed to pay tax under RCM, if any. Okay. Then at the end, we will get how much has to be paid through cash ledger, guys. This is the amount which has to be paid through cash ledger. And please be careful. This anyway will be counted already here. Again, we need to add it here. Clear? And I repeat once again, guys, total input tax credit which we need to deduct here includes whatever tax is paid on inward supply either under RCM as well as FCM, both, as both is available as credit for the recipient subject to conditions. Yes, sir. Chalo, we will see it. First point, supply of goods to Mr. Karthik of Bharuch, Gujarat, so intrastate supply, who is an unregistered recipient, so it is B2C supply, but still taxable. Out of the supply of goods for 6 lakh, okay, so the total value is 6 lakh. 1 lakh is for exempted goods, but no separate invoice has been made for exempt supply. And both supplies were shown in the same invoice as different items. Means 6 lakh includes 5 lakh taxable supply, 1 lakh exempt. So to calculate output tax, we need to take entire 6 lakh or only 5 lakh? Only 5 lakh, guys. Sir, one single invoice is issued for both. No problem. We need to still take only 5 lakh. Okay. Then second one. Issued voucher on 15th October 2025 to ABC Limited of Kanpur, Uttar Pradesh, which can be redeemed against the combo of one personal pizza and one vegetable burger before 14th November 2025. Guys, issue of voucher is not taxable under GST. Yes, as per the clarification. But when voucher is redeemed against the goods or services, it is taxable. That is, the supply of goods or services against the voucher will be taxable at the time of redemption. But we have time till November to redeem it. Whether it is used or not, we don't know. As of now, we will keep it pending. But issue of voucher is not taxable anyway, because voucher is neither the supply of goods nor the supply of services. Coming to third point, provided local delivery service of goods through BCAT, a registered electronic commerce operator registered in the state of Gujarat. Okay. Sir, BCAT, who is the electronic commerce operator, is registered in the state of Gujarat. But who is the supplier? Supplier is SSP Limited. Are they registered under GST? Yes, they are registered under GST. So in case of local delivery service, if the supplier is registered under GST, they will pay tax under forward charge mechanism, guys. So should e-commerce operator pay? No, the supplier has to pay. If supplier is not registered, then the ECO will pay tax as per section 9.5. So please be careful. Local delivery service is a new addition to section 9.5, where e-commerce operator is supposed to pay tax. But if supplier is registered, then they will pay tax. If not, then e-commerce operator has to pay. Yes. So in this case, as supplier is registered, they will only pay tax. Okay, sir. Next, fourth one. Stock transferred without consideration to branch of SSP Limited in Ahmedabad. Branch has a different GSTIN. Very important. Even though it is within the same state, they have a different GSTIN as it operates in a different segment. So can we consider it as a distinct person? Yes, guys. The value of goods for such branch transfer can be taken as 3,50,000 as per the valuation rules. Okay, under GST law. So should this be taxable? Yes, people. So even though there is no consideration for branch transfer, still it will be taxable. As per para 2 of schedule 1, read with section 7(1)(c). This is taxable, guys. As they have taken a separate registration for the branch, it will be treated as distinct person. As per para 2, if there is any supply between distinct person or related person, even without consideration, but in the course or furtherance of business, it will be taxable. And the value will be as per valuation rules, which is already given. So consider it as 3,50,000. On that, we need to calculate GST, guys. So it is taxable. Okay, sir. Then the last one, outward supply year. Provided pure labor services of construction of single commercial unit. This is the keyword here. Located in Rajasthan not forming part of any residential complex to a customer in Jaipur. So immovable property is located in Jaipur, that is Rajasthan. So it will be interstate supply. Because with respect to immovable property, whatever services is provided, what is the place of supply? Wherever the immovable property is located or intended to be located. So here it would be Jaipur, that is Rajasthan. So it will be interstate supply. IGST has to be charged. First of all, sir, is it taxable? Yes. As it is a commercial unit, taxable, guys. If it would have been single residential unit, then exemption was available. But here, please be careful, taxable. Even this, I will just write taxable. This is like not taxable. This is also taxable in the hands of supplier only. And here taxable 5 lakh. Okay, sir. Fine. We will move forward. Now inward transaction. That is, this is helpful for us to calculate input tax. So output tax information done, guys. Next. Fees paid to CA Vijay Jain, a practicing chartered accountant of Mumbai, not registered under GST. Guys, come on. So we are talking about inward transaction. Inward transaction for whom? SSP Limited. So who is CA Vijay Jain now? Supplier. So SSP Limited is recipient. Correct? Yes. So supplier is not registered under GST. Yes. So he is not liable to pay GST. So will he charge and collect GST from the recipient? No. So no forward charge mechanism. And you can check under RCM list. What service is provided here? Statutory audit and certification of work. Is it covered under RCM list, guys? No. This service is not covered under RCM. So that means it is taxable under FCM, but as supplier is not registered, he is not liable to pay GST. Who is supplier here? Vijay Jain. So Vijay Jain is not registered under GST. So he is not liable to pay GST. So can he charge and collect it from the recipient? No. So Vijay Jain would have not charged GST to SSP Limited. And SSP Limited is not liable to pay tax under RCM. So that means on this 2,25,000, there is no tax. It is not at all taxable. No input tax. Okay, sir. Next, NT stands for not taxable. Okay. Yeah. Next, second one. On 2nd October 2025, SSP Limited purchased taxable goods valued 15 lakh from VXT Limited, a registered person in the state of Rajasthan. VXT Limited raised taxable invoice for 15 lakh. However, the SSP Limited paid only 14 lakh 50,000 to VXT Limited as full and final settlement on 25th October 2025. And the supplier VXT Limited issued a commercial or financial credit note of 50,000 on the same date of payment. So this is also inward supply. Interesting. They're telling SSP Limited purchased the goods for 15 lakh, but when they are making the payment, they told, I am paying only 14 lakh 50,000, nothing more than that. That means they are paying 50,000 less. Yes. Now for supplier, who is the supplier? VXT Limited. What is the value of supply, guys? Is it 15 lakh or is it 14 lakh 50? 50,000 is like a discount kind of thing. Yes. But was it agreed at the time of supply? No, sir. It was not given at the time of supply and it was not also agreed at the time of supply. So as per section 15.3, can we reduce the discount? No. So for the supplier, what is the value of supply? 15 lakh. So is liable to pay GST on 15 lakh even though he is receiving only 14 lakh 50,000 less. He cannot deduct it as per section 15.3, guys, as it was not agreed. Okay, at the time of supply, it was not agreed. Yes. So for the supplier, the value of supply is 15 lakh. That means he need to pay GST on 15 lakh. Now, can recipient claim credit on entire 15 lakh or only 14 lakh 50? Entire 15 lakh. It is one of the clarification given, guys. So as supplier has to pay GST on 15 lakh, recipient can claim credit on entire 15 lakh. Full credit is available. Okay, now, sir, here for 50,000, commercial or financial credit note is issued, no, sir? Yes, but still, it will not reduce the tax liability of the supplier. And accordingly, recipient can claim full credit, guys. Got it? So this is a question on the clarification. So if in case, if you guys have not yet updated with that clarification, please do watch. It is an amendment for May 2026 exam. I have covered it by way of separate video, guys. Yes, sir. Chalo. Even that local delivery service also was an amendment. Hope you guys are updated with all of these things. Yes. Chalo. We'll move forward. And amendments play a crucial role, guys. So please don't ignore it. Additional information. SSP Limited paid 75,000 as monthly rent to its full-time director, Mr. Rajan Yadav, an unregistered person located in Ahmedabad, Gujarat, for using building owned by Mr. Rajan Yadav as head office of SSP Limited. Mr. Rajan Yadav rented the building in his personal capacity. See guys, if director is giving directorship services to a company or a body corporate, then it is taxable under RCM. Company need to pay tax under reverse charge mechanism. But here, renting of immobile property will not fall there. But there is a separate entry for renting of immobile property. And here, it is used as head office. So can I consider it as commercial property? Yes. So if there is any renting of commercial property from an unregistered owner, please be careful. The owner is unregistered, but tenant is registered. SSP Limited is registered. Is RCM applicable? Yes, people. This is taxable under RCM. But as per which entry is important, please don't get confused. I will just show you. Just a minute. Yeah. So you can see here, as per entry 6, services supplied by a director of a company or body corporate to a company or body corporate. Who is supposed to pay tax? The company or a body corporate. Yes. But this is only for directorship services. That is the services provided by director in the capacity of director. But now in the individual capacity, he has rented the building, which comes under 5AB, guys. You can read this. Services by way of renting of any immobile property other than residential dwelling. So other than residential dwelling means, can we consider it as commercial property? Yes. Owner is unregistered, but recipient is registered. So in that case, is RCM applicable? Yes. And our case exactly fit in here. So RCM is applicable. Clear? Yes. And please be careful, for RCM there will be two things. One is you need to include it in input tax credit calculation also. Later you need to add it also. Yes, sir. Chalo. Next. Accountant of SSP Limited is of the view that since local delivery service of goods is provided as goods transportation agency, it is exempt. He is also of the view that even if the supply is considered taxable, SSP Limited is not required to pay tax since B cart is a registered electronic commerce operator ECO, and B cart will pay tax under reverse charge mechanism. Not correct, guys. This is wrong. Not correct. So who should pay tax here? The supplier. The supplier has to pay tax. Yes, sir. Okay, it is not correct. And please be careful. GTA will not include a person who is supplying the local delivery services through ECO. It will not include any services provided by way of local delivery. GTA will not include it. Yes. So all the figures are exclusive of GST wherever applicable. Okay. Next, all the conditions necessary for availing the input tax credit have been complied with, and the details of GST paid on inward supplies are available in GSTR 2B. Okay, all the credit is available. And there is also a opening balance of CGST, only CGST, 1,75,000 as input tax credit at the beginning of the month. Please be careful, only CGST opening balance is there. Okay, sir. And all the conditions now necessary for availing the input tax credit have been complied with. Okay, fine. Except whatever is given above. Then assume that all inward supplies are used for outward taxable supplies only. Means they are telling whatever inward supplies they have taken, no, here, this one as well as this is used only to provide a taxable outward supply. Why they have given that is, guys, here one of the outward supply includes 1 lakh worth of exempt supply, and for that they have not used any inward supply items. So credit is not blocked, because if my outward supply is exempt, no credit is available on my inward supply, guys. Yes, but they are clearly given all the inward supply was used for the purpose of outward taxable supply itself. Okay. Turnover of the previous financial year was 290 lakh. Wherever details for determination of place of supply are not given in the question, it shall be taken as intra. That is only when it is not given. If it is given, accordingly consider whether it is intra or inter. Assume that the applicable rates of GST for all outward and inward supplies are IGST 18, CGST 9 and SGST 9. Okay. Then this requirement we already read it. So straight away we will go to the answer, guys. Yeah. computation of minimum net GST liability of SSP Limited to be paid in cash. Cash means cash ledger, okay? For the month of October 2025. Yes, particulars, value, CGST, SGST and IGST. See, ICAI normally suggests the answers like this, but I would also tell the students, you can consider IGST first. IGST, CGST and SGST, especially when you are adjusting the credit, it will be helpful because IGST credit should be utilized fully first. Clear up? So it will be helpful. No, sir, I want to continue like this only. It's fine. If you want to write like the CGST, SGST, and IGST only in the order, you can follow it. If not, what I would suggest is it is better to take IGST first, then CGST, then SGST. Okay, but please be careful. Put the right amount under the right column if that is the case. Okay. GST payable on forward charge, that is on outward supply. We also call this as output tax. Okay. Supply of goods to a Mr. Karthik, unregistered person, guys. So please take only 5 lakh. I already explained on this. So it is an intrastate supply. So 9%, 9%. Yes, sir. Next, voucher issued. They told only it is issued and we have time till November. They didn't talk anything about redemption. So we will assume it is not yet redeemed. So not taxable in October. It is not taxable, guys. Because it is neither the supply of goods nor the supply of services. Okay. As per the clarification. Next, local delivery service, as supplier is registered, he should only pay tax and it is intra-state supply. So CGST 9%, SGST 9%. Hope you understood. Yes, sir. So here 9.5 is not applicable. Why, sir? The main reason because the supplier is registered. Okay. Next, stock transfer to Ahmedabad branch. So it is an intra-state supply, but is first of all, is it a supply? Yes, as per para 2 of schedule 1. Yes, sir. So again 9%, 9% each. Then pure labor construction service for commercial unit. I have already explained it. As it is commercial, it is taxable, guys, and it is interstate supply. The place where the immobile property is located is the place of supply. So 18% IGST. Okay. There are few explanation here. Whatever I already explained you guys can just go through it. Yeah. Even for pure labor services, exemption is not available. Hence taxable. So we will get total output tax payable on outward supply. Okay. Now against this, we have to adjust ITC, which we need to calculate by way of working note. Yes, sir. So we have opening balance of only CGST. Take it. For SGST and IGST, it is 0. Then fees paid to practicing chartered accountant. It is not at all taxable. No RCM, no FCM. So that means no input tax. When there is no input tax, obviously there is no credit for it. Okay, sir. Then purchase of taxable goods from VXT Limited. Please be careful. We need to take entire 15 lakh here. Please be careful with this, guys. So the supplier is liable to pay tax on 15 lakh means. So can recipient claim full credit? Yes. So on 15 lakh, 18% IGST. Claim it fully. Okay. Then this one RCM part. Rent paid for office of building. Please be careful. This is as per which entry. Anyway, RCM is applicable, but not as per entry 6. It is as per entry 5AB. Got it. Sir, should we write the entry number mandatorily? No. But please tell that this is not taxable as per the directorship services provided by the director. It is taxable in its individual capacity by way of separate entry. Okay. So 75,000 on that 9% each. So it is only per month rent. Please don't take full year rent. We are supposed to calculate only for October month, people. So please be careful. Sir, normally in income tax and all, we will take full year rent. No, sir. So I took into 12. No, please don't do that. Okay, here we are calculating only for October month. So take only 75,000. Don't do into 12. Okay, because please be careful with small things like this. In income tax, normally we will do into 12 and do it, right? Yes. So in a hurry, student might not realize it. They may take into 12 only. Yeah. So in 9%, 9%. Here also, the place of supply will be wherever the immobile property is located. That is the head office. It is in Gujarat only. So it is intrastate supply, guys. Okay. So the total credit available. First, we need to use IGST credit against IGST liability. If still anything is pending, we can adjust it against CGST, SGST in any order, in any proportion. But here we have CGST opening balance. Please be careful. Okay. So what is the IGST liability? 1,08,000. So first adjust IGST credit against IGST liability 1,08,000. Remaining credit is how much? IGST total credit, 1 second, is 2,70,000. We have used 1,08,000 here. So the balance is 1,62,000. Actually, we can use it against CGST, SGST in any order, in any proportion. But in given case, we have an opening balance of CGST. So better use entire 162 against SGST. Hope you understood. As we have a opening balance, huge balance of CGST, we are using the remaining IGST balance fully against SGST, guys. 1,62,000. Okay, sir. Then CGST credit. CGST we have how much, sir? Just a minute. 1,81,750, but liability is less than that. How much is our liability? 1,71,000. 1,71,000. Okay. So amount to be paid through cash ledger with respect to output tax is nil. Sir, remaining CGST credit can I use here? No, you cannot. CGST credit cannot be adjusted against SGST liability, guys. Cross utilization between central tax and state tax not allowed with respect to credit. Yes, sir. Okay. Then coming to SGST credit. How much SGST credit is there? 6,750. Use it. Remaining 2,250 we need to pay SGST. Whereas CGST and IGST nil. Sir, we have balance of CGST. No, sir. What do we do with it? We can carry forward it to November month. Whatever balance CGST credit is there, we will carry forward it to the next month, guys. Actually, they have not mentioned anything in the question answer about it. You guys can give a note telling balance CGST credit cannot be adjusted against SGST liability, and hence it can be carried forward for next month. Got it? Yes, sir. Okay. Please be careful, sir. Here, can I take 1,62,000 equally, or can I share it between CGST and SGST? No, guys. It will not be the right decision, because you need to adjust this in the most beneficial manner to the supplier. Okay, fine. We'll move forward. So this is with respect to output tax. And whatever is taxable under RCM with respect to inward supply, we need to add it. That is rent paid for office of building. So 6,750, 6,750 you add it, because guys, this has to be paid through cash ledger. Sir, can we use credit ledger balance? We have the balance of CGST credit. Can I use that to pay this? No, no, no. Because on inward supply, if RCM is applicable, it is called input tax. We need to pay it through cash ledger. And to pay input tax, we cannot use the balance in electronic credit ledger, guys. So we need to pay it. Please be careful. Even though we have unutilized credit ledger CGST credit, still we cannot use it to pay input tax. Whatever balance is there in electronic credit ledger, it can be used only to pay output tax. Okay, so add it both of them. So how much GST has to be paid through cash ledger? CGST 6,750, SGST 9,000, and IGST nil. And remaining CGST credit will be carried forward to next month, guys. Hope you got it. Yes, sir. Done with this. 10 marks question. Next, sub question B. Sub question B. What is it? This also looks like lengthy. So let me read the requirement first. 5 marks question. Calculate the maximum input tax credit that can be utilized for the payment of GST and net GST liability to be paid through electronic cash ledger for the month of July 2025 by Kabira Industries, considering the provisions of Rule 86B, part of input tax credit chapter of CGST rules 2017. Yes, sir. So question is on Rule 86B, guys. Yes, sir. Chalo, we'll continue. We will read the data. Kabira Industries, a proprietorship concern registered under GST, trades in taxable goods. Details for the month of July are as follows. Total outward taxable supply is 53 lakh. Guys, as per Rule 86B, if monthly taxable outward supply is more than 50 lakh, then 1% of output tax liability minimum has to be paid through cash ledger. Means what is the maximum credit which a supplier can use is 99% of his output tax. Even though he has credit more than that, at least 1% of output tax has to be paid through cash ledger. but it has few restrictions. If a case is covered under any of the restrictions given under section under rule 86B, then even though monthly outwards taxable supply is more than 50 lakhs, still rule 86B will not be applicable. What are those restrictions? We will discuss. Wait. So total inward supplies is 48 lakh. So we need to calculate input tax on this and output tax on this. Okay. Then there is also a opening balance of electronic credit ledger. So whatever is there here plus the 48,000 into whatever is the rate of GST, we need to add both. That is the total credit available in electronic credit ledger. Fine, so next additional information. Income tax paid by the proprietor in the financial year 22-23 and 23-24 was 90,000 and 1,20,000 respectively. So we are in which financial year, guys? 25-26. 25-26. Details for the month of July is given. Yes, sir. Now, let me just go to rule 86B. Just a minute. Part of ITC chapter. You guys also can come to it. At the end of ITC chapter, it is there. Yes, sir. Yeah. Restriction on the use of amount available in electronic credit ledger as per rule 86B. So if monthly taxable supply is out more than 50 lakh, then maximum ITC that can be used is 99% of output tax. Yes, sir. But it has few restrictions. Means in the following case, rule 86B is not applicable even though monthly taxable supply is more than 50 lakh. So which are those? First one. If the said person, proprietor, karta, managing director, or any of its two partners, or whole-time director, members of managing committee of association or board of trustee, as the case may be, have paid more than 1 lakh as income tax in each of the last two financial year. Means in each year they should have paid more than 1 lakh, more than 1 lakh. Got it? Yes. So I have also given an example here. You can see in each year it should be more than 1 lakh, more than 1 lakh. But here in 1 year it is more than 1 lakh, but in another year it is 90,000. And moreover, actually we are in the current year, which is 25-26, correct? Yes. But they have not given 24-25. 24-25 is not given. They have given the 2 years before that. But anyway, in one of the year, the income tax paid is less than 1 lakh. See, if you take aggregate, it will be more than 1 lakh. No, no, no. We should check for each year individually. Is it more than 1 lakh? So not satisfied. Okay. Not satisfied. Then input tax credit refund on export supplies without payment of tax on of rupees 1,05,000 was received in financial year 23-24 and 83,000 in financial year 24-25. This is important. So this is the second restriction. You can see, let me read the second restriction, where the registered person has received a refund of more than 1 lakh in the preceding financial year, that is last year, on account of unutilized ITC in case of zero rated supplies without payment of tax or inverted duty structure. Yes. So we need to check only the last financial year, not last 2 years and all. But in the last year, if you observe, you can see the refund is less than 1 lakh. So even here, it is not covered in the restriction. Okay, sir. Next, let us move to the third point. Tax liability and tax payment in cash for the last 3 months. Last 3 months. April, output tax is 3,60,000. GST paid through cash ledger is 5,500. But includes 1,000 rupees RCM payment. See guys, RCM payment means what we have paid on our inward supply. It is called input tax. And we are checking cumulatively 1%. That is, sir, how much is paid through cash ledger till the end of preceding month? We need to take only with respect to output tax. And here 1,000 is RCM. So I need to deduct it. I need to deduct 1,000 and take only 4,500. Okay, sir. Next, May 2025, output tax is 3,20,000 and amount paid through cash ledger is 5,000, which includes 500 RCM payment. So I should reduce here also 500. Here also reduce 500. So how much of the output tax is paid through cash ledger? We need to take it, which is 4,500. Hope you guys are getting it. Guys, as per this point, to check cumulatively, we need to check how much of the output tax is paid through cash ledger. Is it less than 1% or more than 1% cumulatively? And here, whatever is paid under RCM, it is input tax. So I am reducing it. And June, output tax is 4,20,000 and The amount paid through cash ledger is 4,000. Okay, sir. For this, we need to do the calculation and see whether it is less than 1% or more than 1%. We will take care of it later. And inward supplies mentioned above are eligible for input tax credit. Okay. All conditions necessary for availing ITC have been complied with. GST to be calculated at the rate of 18%. Bifurcation of CGST, SGST, IGST not to be considered, means ignore it. All inward and outward supplies figures are exclusive of GST. Oh. So how much minimum tax has to be paid through cash ledger and how much maximum credit we can use is the question for 5 marks. So it is a question on Rule 86B, guys. Yes. So first, calculate output tax and input tax for the month of July. For July, what is the amount of output tax? 53 lakh into 18%, 9 lakh 54,000. Then what is the input tax credit? Opening balance 1 lakh 12,500 is there. Then ITC on the total inward supply for the current month is 48 lakh into 18%, 8 lakh 64. So 9 lakh 76,500 is the total credit. You can see credit is more than output tax. But can we use full credit? Sir, can I use full 954 against my output tax? No. We need to check the applicability of Rule 86B. It is important to note that where the value of taxable supply of a registered person in a month exceeds 50 lakh, he cannot use the amount available in the electronic credit ledger to discharge the output tax liability beyond 99% of output tax liability. Above restriction is not applicable subject to specified exception, means this point not covered, this point not covered. This point is important, guys. This is important. Cumulative calculation. Yes. We will check what is the total output tax liability. Guys, total output tax liability we need to take April, May, June as well as July also. Because we are doing the calculation for July. We are checking whether Rule 86B is applicable or not for July. So should we consider the output tax liability of July also? Yes. Please be careful with it. Yes. So what is the total output tax liability? I will take it like this. 3,60,000, 320. It's a okay. Let me write it for this. This is for April, May, and June. Sir, should I take it for July also? Yes, guys. Please take it for output tax calculation. Okay. And 1% of that comes to 20,540. Okay, if I add up all this, we will get 20 lakh 54,000 into 1%. 20,540. So at least this much should have been paid through electronic cash ledger. If already 20,540 or more than that is paid through cash ledger, then in July, Rule 86B is not applicable. Okay, let us see how much of output tax is paid through electronic cash ledger till the end of last month. And for this, should we consider July? No. Guys, in July, we have not yet paid any amount. No, we are checking should we pay? If yes, how much? So we need to consider for amount paid through electronic cash ledger, we need to take only April, May and June. July will not be there. Okay, yes. Chalo. So for April, 4,500. For May, 4,500 again. Then June, 4,000. July will not come because July we are still checking how much we should pay. So there is no question of taking July. So please be careful. I repeat this point. Listen here. For checking the cumulative 1%, whether whatever is paid through electronic cash ledger till now, is it more than 1% or less than 1%? For output tax, we need to take including the current month from the beginning of the financial year till the current month. Whereas for checking how much money is paid through electronic cash ledger with respect to output tax, we need to take till the end of preceding month. Current month will not come there. Okay, sir. 13,000 is paid. So 13,000 is less than 20,540. That means, sir, less than 1% of output tax is paid through cash ledger. So that means Rule 86 be applicable, huh? Yes. So even this exception is not covered. Is not covered, guys, in the given case. Okay. Or else you can check like this also. Simple. If you take this, divide it by 20 lakh 54,000 into 100. See what is the percentage. It is less than 1%. So as it is less than 1%, it is not covered in the third exception also. Hope you got it. Yes. That means Rule 86 be applicable, huh? Yes, sir. Applicable in July month. Thus, amount of output tax liability discharged in cash does not exceed 1% of total output tax liability applied cumulatively up to the said month in the current financial year. Hence, Rule 86B will be applicable in the given case since such exceptions are not applicable in the given case. And please be careful, guys. There is actually two more exceptions. But for this point, it is not relevant. For this question, it is not relevant, so we are not considering. They had given int only about 3 points. That is income tax, refund of unutilized ITC, and this one, cumulative calculation. Only these 3 points we checked. There are two more points which was not relevant for this question, so that is why we are not considering it. Yes, sir. Please be careful. One more addition was there. Totally four was there, but fifth one addition is there with respect to the manufacturer of sin goods and all. Yeah, sure. Hence, Rule 86B will be applicable in given case since such exceptions are not applicable in the given case. Accordingly, maximum input tax credit that can be utilized for the payment of GST is 99% of output tax. Please be careful, guys. By mistake, you might apply 99% of input tax. No, no, no. 99% of output tax, which comes to 9,44,460. Then net GST liability to be paid through electronic cash ledger. Again, 1% of output tax. Here also, please don't take 1% of input tax credit. It is 1% of output tax. Output tax for July month is 9,54,000, guys. Hope you got it. Yes, sir. Let us move to the question number 6. Done with compulsory question, guys. Question number 6 is on watch. 5 marks question. Compute the means sub question A. Compute the amount of total eligible input tax credit that can be availed by BVG Limited in the month of October. Okay, for October, how much credit is available? With necessary explanation for the treatment of each item separately as per the provisions of GST law. Actually, you can see on ITC there are two questions. Previous question also, Rule 86B also is a part of ITC. Even this question is on ITC. Okay. As and when we read, we will discuss whether credit is available or not available. BVG Limited, a registered supplier in Bangalore, Karnataka, is a manufacturer and trader of goods. Following information has been provided by BVG Limited pertaining to GST on inward supplies during the month of October 2025. Purchased raw material which has been used for zero rated supply. Guys, if my outward supply is zero rated, can I claim credit on my inward supply? Yes, it is available. So it is available. 70,000. And what they have given is straight away GST amount. Don't apply any percentage and calculate it. Next, works contract service for making foundation and structural support to plant and machinery, which has been capitalized in the books of accounts. Guys, credit available? Huh? Yes. If it is a works contract service other than plant and machinery which is capitalized, credit is not available as per section 17.5. But here, as it is for plant and machinery, credit is not blocked as per section 17.5, guys. It is not blocked, means available. Okay. Next, third one. Purchase of raw material from Amber Enterprises Private Limited, registered in the state of Punjab, 4 lakh. It includes the GST of 40,000 on raw material purchased on 15th March 2025, last financial year. So this relates to financial year 24-25 people. But the invoice were uploaded in GSTR1 on 27th October 2025 and such details were communicated to the recipient in form GSTR2B. Means we need to check the time limit for this credit. Remaining 3,60,000 available. Remaining 3,60,000 available. Okay, na? Yes. For 40,000, we need to check section 16.4 time limit. The maximum time limit to avail the credit. What is it? 30th November of next financial year or actual date of filing annual return. So actual date of filing annual return, they would have given it somewhere in the adjustments. We will see it later to decide whether credit is available for 40,000 or not. Next, fourth one. Purchased a new truck from a dealer in Bangalore, Karnataka for transportation of raw material. BVG Limited claimed depreciation under the Income Tax Act 1961 on the value of new truck purchased, including all applicable taxes. Guys, see, if it is a truck, credit is not blocked under section 17.5. But if depreciation is claimed on the GST component in income tax, that means if GST has been capitalized to calculate actual cost of an asset to claim depreciation in income tax, then there is no GST credit available. So credit is not available as per which section, sir? 16 subsection 3, which has connection to income tax. No credit for this. Okay. Next. BVG Limited ordered 3 independent orders for tools to be used in repair of machine to ABG Limited, which consists GST of 1 lakh for each order, means totally 3 lakh. For each order, 1 lakh. 111. The tools will be delivered in various lots, means 3 independent orders, but in that order it will be delivered in lots. And if the goods are delivered in lots, as per proviso to section 16, you can claim full credit only when you receive last lot. Yes, sir. However, out of this third orders, total for 2 orders were delivered in the month of October itself. Okay, 2 lakh credit available, no problem with it. Okay, sir, let me write. 2 lakh available. What about remaining 1 lakh? Whereas 50% of the tool for the third order had been delivered in the month of October and remaining 50% were delivered in the month of November. Although GST had already been paid for all orders. Guys, that means on 1 lakh, no credit. Because 50% is delivered in October. Remaining 50% will be delivered when? November. So full 1 lakh credit can be claimed only in November. And please be careful. Don't consider that, sir, entire order is received in lots. No, no, no. Each order is different. There are totally 3 orders. And those order is received in lot. Sir, is 2 orders completely received in October? Yes, completely received. So 2 lakh credit available. Whereas the third order, 50% is received, 50% is received in November. So that means 1 lakh credit will be fully available in November, guys. Okay, sir. Other information. All the above inward supplies except serial number 1 above have been used in the manufacture of taxable goods. Everything means whatever is the inward supply is used in the manufacture of taxable goods, it seems. Fair enough. Inward supplies at serial number 1 above have been used in the manufacture of exempt goods. See, serial number 1, what did they give? Purchase of raw material which has been used for zero rated supply. Guys, here they clearly told it is used for zero rated supply. If your outward supply is zero rated, credit is available on inward supply. Yes, sir, I can claim it. But here they have given something opposite to this. They're telling inward supply in serial number 1 is used to manufacture exempt goods. It cannot be both. It cannot be both because under GST, zero rated is different, exempt is different. If my outward supply is exempt, guys, actually there is no credit on inward supply. So which one should I follow, sir? This statement or the first statement given? So I feel somewhere that this is given by mistake. But still, I feel again sorry for the students who have written in this attempt because if you answer as per this, if you consider this, then the answer would be different. Whereas if you consider this, then the answer would be different. Okay, but we will go as per this only. So is credit available? Yes, sir. Then annual return for the financial year 24-25 has been filed on 25th October. This is important for us to decide whether credit is available for 40,000. So as per section 16.4, maximum time limit to claim credit is 16.4. Let me write it. First point is 30th November of next financial year. So it would be 30th November 2025. Yes, sir. Or the actual date of filing the annual return, which is 25th October 25. Whichever is earlier, which in our case is 25th October 25. Okay. Whereas the details of this is given by the supplier in his GSTR1 only on 27th October after the expiry of the time period. So that means there is no credit available for this 40,000, guys. Only on 3,60,000 credit is available. Okay, sir. Then ignore the bifurcation of CGST, SGST and IGST subject to the information given above. Assume that all other conditions necessary for availing the ITC have been complied with. Okay, sure. We will see the solution. So raw material, first computation of total eligible ITC that can be availed by BVG Limited in the month of October. Okay, better write the name of the month also. That would be better. Raw material used for zero rated supply 70,000. So if it is a zero rated available, but if you consider it as exempt, not available. But it cannot be both. It cannot be zero rated also. It cannot be exempt also. But it can be partly. For example, assume I am purchasing one input to produce two output. One might be zero rated, one might be exempt. But in the question, they didn't mention anything like that. They mentioned both. At the beginning, zero rated, later, exempt. It cannot be both, guys. Yes. So they have considered zero rated and accordingly allowed. Works contract service allowed, guys, as it is for plant and machinery. Then purchase of raw material from Amber Limited only for 360 allowed, remaining 40,000 lapse. Okay. All the explanation and all is given here as per section 16 subsection 4. Then purchase of new truck for transportation of raw material as depreciation is claimed on it as per section 16 subsection 3 credit is blocked. Okay. Next, tools purchased under 3 independent orders. For 2 lakh it is fully available. For remaining 1 lakh next month. So for October 6 lakh 40,250. Better to mention the month, guys. For October it is. Okay, sir. Chalo. Next, coming to sub question B, again for 5 marks. You are required to determine place of supply. Okay, 3 cases are there. Sky Airlines Private Limited, referred as SAPL, operating Sky Airlines, registered under GST in Chennai, Tamil Nadu, reported the following supplies. First one, Ravi, an unregistered person, so recipient is unregistered, from Mumbai, Maharashtra, booked a round trip ticket from Delhi to Jaipur on 7th April 2025 for a consolidated payment, means is going from Delhi to Jaipur and coming back. Guys, when there are two journeys, that is going as well as coming back, we need to treat it as separate journeys. That is going onward journey Delhi to Jaipur. And as recipient is unregistered, what would be the place of supply? Starting point Delhi. And for the return journey, which should be treated separately, Jaipur to Delhi, what is the starting point? Jaipur. That would be the place of supply. That would be the place of supply. Just a minute, I will show you. You can come to place of supply provision for services. This is under services, guys. So as per section 12 of IGST Act, transportation of passengers. Okay. So here, if recipient is unregistered, place where the passenger embarks is the place of supply. That is the starting point in simple. Okay. Next, I have also mentioned explanation here. What is it? For the purposes of this subsection, the return journey shall be treated as a separate journey, even if the right to passage for onward and return journey is issued at the same time. And they have tried to confuse you by giving that also. It is booked at a single time with a consolidated payment. Doesn't matter. We need to treat it as separate journey, guys. Yes, sir. So we will see the solution. Just a minute. Yeah. The place of supply of passenger transportation service to an unregistered person is the place where the passenger embarks on conveyance for a continuous journey. The return journey shall be treated as a separate journey. Accordingly, for onward journey, that is for going Delhi to Jaipur, Delhi will be the place of supply, starting point. Whereas for return journey, Jaipur to Delhi, Jaipur will be the place of supply. Hope you got it. Okay, sir. Done with this. Next, on booking ticket, Ravi entered into a silver tier of SAPL, which unlocked a concessional ticket which could be used by him in the future. Okay, in the future. For travel between any two domestic location, which they didn't mention. So when the location is not known or when the starting point is not known, then we need to decide place of supply as per subsection 2. As per subsection 2. So here only it is given proviso. Let me just read it once. Provided that where the right to passage is given for a future use and the point of embarkation is not known at the time of issue of right to passage, means you have purchased the ticket for future travel, but you don't know what is the starting point as of now. The place of supply of such service shall be determined in accordance with the provisions of subsection 2. Subsection 2 means general provision. Yeah, this one, general case, general principle. Okay, all under this, whatever is there, everything is special. Now we are coming back to this. In our case, the recipient is unregistered. So if recipient is unregistered, we need to take location of recipient if address exists. If not, then location of supplier. Location of supplier. And as the question is silent, we need to answer from both the point of view. If address exists, what? If it doesn't exist, what? Both. Yes. Better to give the points. They have given the points, no? Like 1, 2, 3, like this. Better to give like this while answering. So this is 2. This is one. The place of supply for unregistered recipient of concessional ticket that could be used for future travel is address or location of the recipient as per the records of supplier if it exists. Where such address is not available, then the place of supply shall be the location of supplier of services. In case the address of Ravi is available in the books of SAPL, that is SAPL is supplier, whereas Ravi is recipient here, guys. The place of supply will be Mumbai, Maharashtra. However, if address of Ravi is not available as per in the records of SAPL, then the place of supply will be the location of the supplier, which is Tamil Nadu. Got it? As question is silent about whether the address is available or not, better answer from both the point of view. Okay. Then third case here. While his journey back from Jaipur to Delhi, Ravi paid SAPL Sky Airlines for watching a movie. Okay. On board a conveyance, a service is supplied, guys. So whatever is the first scheduled point of departure, that will be the place of supply. Yeah, you can see as per subsection 10. On board a conveyance, including a vessel, an aircraft, a train, or a motor vehicle, location of first scheduled point of departure will be the place of supply. Okay. From where to where he was going? From Jaipur to Delhi. So what is the starting point? Jaipur. That will be the place of supply, guys. That will be the place of supply. Yes, sir. Okay. So this is for third point. Where the services are supplied on board a conveyance, including an aircraft, the place of supply shall be the first scheduled point of departure of the conveyance. Yes, sir. So the place of supply for services of watching a movie is Jaipur because the journey is from Jaipur to Delhi. Please be careful. Yes, that is when he took this service. Okay. And here actually they have not mentioned anything about section. Guys, at least main section you quote it. That is as per section 12 of IGST Act. Even if you don't remember all the subsections, that's okay. At least write the main section number 12. Okay. Means at the beginning itself. Because all question is on section 12 of IGST Act only. All three cases. Fine, sir. Sure. Done with this. We'll move to the next question. Question number 7. Yeah. Question number 7 under that sub question A. What is this question on? Calculate the amount of tax deducted at source, that is TDS, to be deposited by HIM Corporation for the month of May 2025. So the question is on section 51, guys. Tax deducted at source means section 51. So small topic, but still 5 marks question is asked. HIM Corporation, a public sector undertaking. Please be careful. Guys, TDS has to be deducted only by the specified people whom we call them as deductor, not by everyone. There are list of people they are given as per section 51. One of them is public sector undertaking. So, is this person covered under the deductor list? Yes. Registered under section 51 1D of CGST Act 2017 in Simla, Himachal Pradesh for deduction of tax at source, provided the following details regarding the payment of bills during the month of May 2025. Guys, see, as per TDS provision, that is section 51. Just a minute, I will go to that. Chapter 14. Yeah. See, only the following people can be the deductors. Yes, sir. One of them you can see your public sector undertaking. Yes. And they should deduct TDS only when the value of supply is more than 2,50,000. When value is more than 2,50,000. Yes, sir. How much TDS, sir? 1% CGST, 1% SGST. Okay. Sure. We will see one by one. First, the suppliers are the following. Please be careful. Who should deduct TDS, supplier or recipient? Recipient, because they are the one who will pay consideration. So, recipient is already a public sector undertaking. Who is the supplier? We need to check. What is the value also? We need to check. Okay. Yes. So, please keep an eye on both. First, elect traders, they are the suppliers. Okay. All these people are the suppliers. Elect traders registered in the state of Himachal Pradesh for the supply of lab equipment. 2,45,000, no TDS, guys. As the value is less than 2,50,000, for each transaction we need to see. Don't aggregate and check it. 2,45,000 less than 250, no TDS. Next one, Arun, a labor contractor registered in the state of Himachal Pradesh for supply of manpower. 2,60,000. On this TDS is applicable, people. TDS is applicable more than 2,50,000. Next, Adunik Heavy Electricals, a registered public sector undertaking, registered in Raipur for supply of goods 3 lakh 80. Guys, even though the value is more than 2 lakh 50, no TDS on this. Sir, why no TDS? Because PSU to PSU. If supplier and recipient both are PSU, then no TDS. It is given here. You can see from public sector undertaking to another public sector undertaking, then no TDS. TDS has been exempted. Okay, sir. So no TDS on this. Last one, fourth one. Jain and Sons registered in Ludhiana. Guys, please be careful. They are the suppliers. Okay. Who is recipient? HIM Corporation. Yes. For providing rights to use space for hoarding mounted on the ground in the state of Himachal Pradesh. Guys, in case of hoarding, it is a immobile property. What is the place of supply? Wherever it is located. Okay, that is Himachal Pradesh. So place of supply is Himachal Pradesh. Let me just underline it. Place of supply is Himachal Pradesh. Location of supplier is Punjab. So it is an interstate supply. So should TDS be deducted on this? Yes, IGST. It is an interstate supply. Location of supplier is Punjab, whereas place of supply is Himachal Pradesh. Okay, sir. I will just write it here. Interstate. Inter. Next, second one, B. For providing right to use space for hoarding mounted on the ground in Chandigarh. Again, what is the place of supply? Place of supply is Punjab. Okay. Location of supplier is in Punjab. Place of supply is in Punjab. So it is a intrastate supply. In case of intrastate, CGST and SGST is applicable. Yes, sir. But should TDS be deducted here on 3 lakh? More than 2 lakh 50. But TDS is not applicable. Why, sir? I repeat, please listen here. Location of supplier and place of supply is in Punjab. Whereas location of recipient is in Himachal Pradesh. So if recipient deduct TDS, he will deduct CGST and SGST. SGST of what? Himachal Pradesh. But credit has to be passed on to Punjab. Not possible. Not possible as two states are involved. So nature of supply is intra. But as recipient is in another state, TDS is not applicable. So on this, TDS is not applicable. Sir, this is as per which provision, sir? Just a minute. You can read this proviso. I will just read out for you guys. Provided that no deduction shall be made if the location of supplier and place of supply is in a state or union territory which is different from the state or union territory of registration of the recipient. So that is where our case will fit in. Sir, the location of supplier is in Punjab, place of supply is in Punjab, intrastate, whereas recipient is from Himachal Pradesh. So no TDS, guys. So TDS is applicable on 260 and 420 only on two transactions. Yes, sir. On this, it would be CGST, SGST, whereas on this, it would be IGST. Let us see quickly. Computation of TDS to be deposited by HIM in corporation as per section 51 on 2 lakh 45 as it is less than 2 lakh 50. And please be careful while checking 2 lakh 50, we need to consider only the value portion. Don't add GST for it. Yes. Payment to Arun as it is intra 1% CGST, 1% SGST. Then payment to Adunik, PSU to PSU, no TDS. Then payment to Jain and Sons. This is for this IGST. IGST straight away 2%. Please be careful. If it is IGST, 2%, guys. So TDS rate, it is given here 1% CGST, 1% SGST. If it is interstate supply, it would be 2%. It would be 2%. Is that clear? Please be careful. TDS would be applicable whether it is intrastate supply or interstate supply. If it is intra, it would be 1 plus 1. If it is inter, straight away 2%, guys. Yes, sir. Then for the second one here, no TDS as it is covered in the proviso. So the total amount of TDS to be deposited or deducted. What they have asked? Deducted or deposited. Anyway, whatever is deducted has to be deposited. Okay, they have asked deposited. Same amount you take. Because whatever has been deducted, guys, has to be deposited within 10th of next month. So CGST and SGST 2600 each and IGST 8400. Yes, sir. Fine. We'll go to sub question B. 5 marks again. Reproduce the list of additional accounts and records to be maintained by the person executing works contract under the provisions of Rule 5614 of CGST Rules 2017. Yes, rule number and all you need not worry. So they are asking what is the additional accounts to be maintained by a person who is executing works contract. That is nothing but construction. So what and all? Because same to same question is there in our additional question. If you come to the question bank in chapter 11, you can see this one. Question number 2. Works contract. So these are the additional details which has to be maintained. Yes, sir. You can just go through it. Yes. Did you go through? We will see what answer they have given. It was already asked in September 2024, guys. Yes. You can see totally 7 points they have given. But as per this, there are 5 points. What they have done is name and address. They have taken separate points, guys. They have just taken that as 2 separate points. Okay, name separately, address separately. Name separately, address separately. Name and address of suppliers, name and address of recipients. Okay, but for 5 marks, even if you write 5 points, it would be sufficient, guys. Okay, sure, we'll move forward. Question number 8. Expand the meaning of specified actionable claim as per the provisions of section 2 clause 102A of CGST Act 2017. Explain the treatment of specified actionable claim and other actionable claims under CGST Act 2017. Okay. Guys, see, actionable claim is a part of goods definition. Is it a goods? Yes. Then, sir, is it taxable under GST? Actionable claim is included in Schedule 3, guys. That means it is not taxable, but it is other than specified actionable claim. So what is covered in Schedule 3 is actionable claim other than specified actionable claim. So which means specified actionable claim is taxable under GST. Whereas anything other than specified actionable claim, anything else other than specified actionable claim is like insurance policies, okay, or any other thing which is outside the definition of specified actionable claim, it is not taxable. And what is specified actionable claim is covered in section 2, 102A. What are those? All the betting related thing. Betting, casino, gambling, horse racing, lottery, and online money gaming. And on this, actually, GST rate is 40%. Yes, it is liable for GST. Whereas anything outside this means any other actionable claim other than this is not taxable because it is neither the supply of goods nor the supply of services, guys. Yes, sir. Fine. Then coming to B, for B there is internal choice. You can either answer this or this for 5 marks. Let us see. As per the explanation to section 31 of CGST Act 2017, the expression tax invoice shall include any revised tax invoice issued by the supplier in respect of supply made earlier. With reference to the above explanation and as per the provisions of section 31(3)(a) of CGST Act, which talks about revised tax invoice, and Rule 53 of CGST Rules 2017, describe the condition under which revised tax invoice can be issued. Okay. And whether registered person is required to issue consolidated revised tax invoice in respect of taxable supply made to an unregistered person. Okay. So this is on invoice topic, section 31. You can come to invoice topic. Yeah. So you can see under section 31 subsection 3, first point is with respect to that. A registered person may within 1 month from the date of issuance of certificate of registration and in such manner as may be prescribed issue revised tax invoice against the invoice which is already issued during the period beginning with effective date of registration till the date of issuance of certificate of registration. I had explained this with an example. I will just show this, guys, in the regular class. Hope you guys can recall it. Yeah, this one. Assume a person was liable for registration as on 1st January, either as per section 22 or as per section 24 is covered. and he has applied for registration on 15th January in REG 01. So did he apply within 30 days? Yes, he applied for registration within 30 days. And registration is granted on 20th January. So he got his GST IN on 20th January through REG 06. Registration certificate will be granted in REG 06. Now, he is called registered person from what date? From 1st January. That is the date on which he was liable for registration. So effective date of registration is 1st January as per Rule 10. And for whatever supplies he has made between these dates, he need to go and issue revised tax invoice within 1 month from the date of grant of registration. Hope you understood. I repeat, for whatever supplies is made from 1st January to 20th January, he should go and issue for those recipients revised tax invoice within 1 month from 20th January. Hope you got it. Yes, sir. Next, whether the registered person is required to issue consolidated revised tax invoice, he can issue for all the unregistered recipients, whereas if recipient is registered and if it is interstate supply, it depends on the value. Just a minute. Yeah, I have given an explanation here with respect to revised tax invoice. Yeah, let me read the last 2 points. A registered person may issue consolidated revised tax invoice in respect of all taxable supply made to an unregistered recipient, that is in case of B2C supplies. Okay, irrespective of the value. However, in case of interstate supply, a consolidated revised tax invoice cannot be issued in respect of all taxable supply made to an unregistered recipient if the value is more than 2,50,000. If the value is more than 2,50,000. So, whenever there is a supply between this intervening period, if it is intra and if the recipient is unregistered, irrespective of the value, you can issue consolidated revised tax invoice. And if it is interstate supply and if recipient is registered, check what is the value. If the value is less than or equal to 2,50,000, you can issue consolidated revised tax invoice. And if the value is more than 2,50,000, you cannot issue consolidated revised tax invoice. Is that clear? I repeat. If the recipient is unregistered and if it is intra, always you can issue consolidated revised tax invoice, irrespective of the value. And if it is inter, check the value. If value is less than or equal to 2,50,000, yes, we can issue consolidated revised tax invoice. And if the value is more than 2,50,000, no, we cannot issue consolidated. We need to issue individual revised tax invoice for each supply. Yes, sir. Chalo, we will see the answer. A person who applies for registration within 30 days of becoming liable for registration and registration is granted, the effective date of registration is the date on which they become liable for registration. Thus, there would be a time lag between the date of grant of registration and the effective date of registration for the supplies made by such person during this intervening period. The law enables the issuance of revised tax invoice. So better to write section, guys, 31 subsection 3. They are not mentioned here, but if you guys know it, it is better to write. Then about consolidated revised tax invoice. Yes, in the following cases, consolidated revised tax invoice is required for supply to an unregistered person, that is, the recipient is unregistered. A consolidated revised tax invoice may be issued in respect of all taxable supplies made to unregistered recipient during the aforesaid period. Okay. However, in case of interstate supplies, where the value of supply does not exceed 2.5 lakh, that is less than or equal to 2.5, a consolidated revised invoice may be issued separately in respect of all unregistered recipient located in the state. Otherwise means if the value is more than 2,50,000, a recipient wise consolidated revised invoice may be issued. One second. Does not exceed 2.5 lakh? Yes, we can issue it. May be issued. Sir, if it is more than 2,50,000 what? That is vice versa case. We have seen. In case of interstate supply, consolidated revised tax invoice cannot be issued. But they have given it in an opposite way here, guys, in the suggested answer. Because they are told, can we issue consolidated revised tax invoice? Yes. If recipient is unregistered and if it is an interstate supply, only if the value does not exceed 2.5 lakh, we can. Oh, alternative. Section 44 subsection 1 of CGST Act 2017 provides that The commissioner may, on the recommendation of GST Council, by notification exempt any class of registered person from filing annual return. Okay. In accordance with the provisions of section mentioned above, list out the registered persons who are exempt or not required to file annual return. Okay. There are a list of people who are not supposed to file annual return. We will see that. Okay. Like TDS deductor or TCS collector and all. Mention the due date by which annual return is required to be filed for a financial year. That is 31st December of next financial year, guys. That is the due date. Okay. So those people, guys, see simple. Annual returns totally there are three. GSTR 9 is for the person who is covered under section 9. GSTR 9A is for the composition supplier, and GSTR 9B is not yet notified in reality, but still it is an annual statement applicable for TCS collector. Correct? Yes. So who and all is not supposed to file annual return means, see, anyway composition supplier and the TCS collector will come because they have 9A and 9B. And here they told only annual return. They didn't tell 9, 9A, 9B. So we need to consider all three. So who is not supposed to file annual return? If they ask only about 9, guys, please be careful. If they ask who should not file 9, simple. Whoever is filing 1 and 3B, they all should file 9 except CTP. That is casual taxable person. Casual taxable person will file GSTR 1 as well as 3B, but he will not file GSTR 9 because his registration will be only for a temporary period. He will not be active for entire year, guys. Got it? Yes. Whereas NRTP and all has a separate return, that is non-resident taxable person. They will not file 1, 3B also. They will not file 9 also. Got it? Yes. So this is actually part of returns chapter. I will just show you. Last chapter, guys. Yeah. See, normally whoever is filing 1 and 3B, they have to file 9. They have to file 9, but for CTP, is 9 is not required. Yes. But here the question is not only about 9, they asked about 9 annual return. So it includes 9, 9A as well as 9B. Actually 9B is annual statement, but still anyway. They told as per section 44. Fine. The following people is not required to file annual return, guys. They have separate returns. See, casual taxable person, I am repeating again, will file 1 and 3B but not 9. Okay. Whereas these people, they will not file 1 also, they will not file 3B also. They have separate returns. And which are those separate returns also we have discussed while doing GSTR 1. Just a minute, I will show you. Yeah. You can see for this people they have separate returns. For composition supplier 4 and 9A, for NRTP GSTR 5, for supplier of online information and database access or retrieval services 5A, input service distributor 6, person who is deducting TDS GSTR 7, and the person who is collecting TCS GSTR 8. But this is statement. Yes sir. Fine. Chalo, we will see the answer. So the following people is not supposed to file annual return. Sir, can we write composition supplier here? Please don't write it. Because they will file annual return, but in GSTR 9A. Question was not only on GSTR 9, it was on annual return. So annual return, as I mentioned, includes 9 as well as 9A and also 9B, but 9B is a statement. Yes, sir. Okay, so 9B, so that is why they are mentioning the person who is collecting TCS here, but not composition supplier. Please don't write composition supplier here. It will be wrong because they will file 9A, which is annual return only. Okay, sir. And here also, this exemption is there. If the turnover is up to 2 crore in the financial year 24-25 and onwards, then no annual return, guys. For anyone, anyone. Yes, sir. Then the due date is 31st December of next financial year. Yes, guys, we are done with this.